BlackRock, the $14 trillion asset manager controlling more money than most countries' entire GDP, just executed the largest strategic repositioning in modern financial history. And your retirement is sitting directly in the blast zone they're abandoning. While you've been distracted by political theater and market volatility, BlackRock has quietly repositioned itself away from the very foundation of American retirement security: long-term U.S. Treasury bonds. This isn't just another investment adjustment. This represents the smart money abandoning the ship that's been carrying your 401k, your pension, and your financial future for decades. Let me put this in perspective for you. When BlackRock moves, markets follow. When they speak, governments listen. And when they abandon a position they've held for years, you need to pay attention because your retirement is likely sitting in the wreckage they're leaving behind. Here's what actually happened, and why Wall Street is working overtime to keep this quiet. In December 2025, Jean Boivin, head of the BlackRock Investment Institute, made a seemingly technical announcement that sent shockwaves through the financial world. BlackRock's research division downgraded their view on long-term U.S. bonds from neutral to underweight for the next 6 to 12 months. In investment speak, that means they're actively betting against the very instruments that form the backbone of most retirement portfolios. But this wasn't just any downgrade. This came from the same firm that has been the biggest cheerleader for American financial markets for decades. BlackRock's chief strategist, Michael Dilmanian, stated clearly that their strongest conviction has been staying underweight long-term U.S. Treasuries, and they maintain that view as concerns about the deficit mount and term premium. The extra yield investors demand for holding longer duration bonds continues to rise. Let that sink in. The world's largest asset manager is telling you that the safest investment in human history, U.S. government bonds, is no longer safe enough for their clients. But here's the part that should terrify you. Your 401k, your pension fund, your retirement account is still loaded with these same bonds that BlackRock is running from. The numbers tell a story that Wall Street doesn't want you to understand. The U.S. national debt has exploded to over $36 trillion according to BlackRock's own investment institute data. That's roughly $110,000 for every man, woman, and child in America. And it's growing by the minute. BlackRock's research division spelled it out in terms that should make every American over 40 break into a cold sweat. Rising borrowing needs in both the public and private sectors are likely to keep upward pressure on interest rates. Translation: the government needs to borrow so much money that interest rates will stay high, which destroys the value of existing bonds. The same bonds sitting in your retirement account right now. But here's where it gets really scary. BlackRock didn't just downgrade U.S. bonds. They've been systematically moving money into what they call widening country dispersion. That's financial speak for getting money out of America and spreading it around the world. They're literally diversifying away from the United States. Think about that for a moment. The company that helped build the modern American investment landscape is quietly moving money overseas. They're buying infrastructure in Europe, private credit in Asia, and real estate everywhere except where your retirement money is trapped. Larry Fink, BlackRock's CEO, has been dropping hints about this for months. In his 2025 annual letter to investors, he wrote something that should have been front-page news. The U.S. has benefited from the dollar, serving as the world's reserve currency for decades, but that's not guaranteed to last forever. If the U.S. doesn't get its debt under control, if deficits keep ballooning, America risks losing that position. Let me translate that for you. The man who controls $14 trillion is telling you that America's financial dominance might be ending. And while he's positioning his clients for that reality, your 401k is still betting everything on American bonds and stocks that assume nothing will ever change. The timing of BlackRock's moves tells you everything you need to know about what's really happening. Over the past 2 years, they've spent over $30 billion acquiring private market companies in a coordinated strategy. They bought Global Infrastructure Partners for $12.5 billion. They acquired HPS Investment Partners for another $12 billion. They purchased Prekin as the private markets data provider, completing their trilogy of private market dominance. They're systematically building positions in assets that don't depend on government promises to pay. Meanwhile, what's happening to traditional retirement investments? BlackRock's own research shows that bonds no longer provide portfolio protection. In their 2026 investment outlook, they explicitly stated that in this environment, bonds no longer provide the same level of portfolio ballast. That's devastating news for anyone counting on a traditional retirement strategy. For decades, financial advisors have preached the gospel of the 60-40 portfolio strategy: 60% stocks, 40% bonds. The idea was that when stocks went down, bonds would go up, protecting your retirement from major losses. BlackRock just told you that strategy is dead. But it gets worse. The traditional 60-40 portfolio model that built American retirement wealth is being systematically dismantled. Sounds reasonable to diversify, except for one problem. Regular Americans can't access these private investments. They're reserved for institutional investors and the ultra-wealthy. So while BlackRock moves their clients into private infrastructure deals and exclusive real estate partnerships, your retirement money is stuck in the old system that they're abandoning. You're being left holding the bag while the smart money exits stage left. The cryptocurrency angle makes this even more concerning. BlackRock's iShares. Bitcoin Trust, ticker symbol IBIT, launched in January 2024, has become their most profitable product line. It's now managing over $90 billion in Bitcoin assets and generating an estimated $245 million in annual fees. They've moved more money into Bitcoin in 2 years than most companies manage in their entire existence. Larry Fink has been remarkably candid about why they're doing this. He's talked about Bitcoin as a hedge against currency debasement. In his December 2025 column for The Economist, co-authored with Rob Goldstein, BlackRock's head of digital assets, he discussed tokenizing every financial asset on Earth. He's essentially telling you that the traditional financial system is being replaced by something entirely different, and BlackRock intends to control that transition. Here's what this means for your retirement. While you're stuck in funds that own the old system, BlackRock is building the new one. They're not just moving money around, they're moving toward a completely different financial infrastructure, powered by their Aladdin technology platform that processes over $21 trillion in transactions annually, and it doesn't include you. The political implications are staggering. BlackRock has been under intense pressure from Republican-controlled states over their ESG investing policies. Florida pulled $2 billion from BlackRock. Indiana divested their pension funds. 11 Republican attorneys general filed lawsuits claiming BlackRock's environmental policies violate antitrust laws. But here's the genius of BlackRock's strategy. They've turned this political pressure into an opportunity to abandon the positions that were losing money anyway. They've scaled back ESG investments, liquidated sustainable funds, and repositioned themselves as purely profit-focused. They're using political cover to execute a financial strategy that was already in motion. Larry Fink even admitted this publicly. At the Aspen Ideas Festival in 2023, he said he was ashamed of being part of the ESG conversation because the term had been weaponized. That's not embarrassment, that's strategy. He's distancing BlackRock from anything that might interfere with their ability to move money wherever they want. The human cost of this transition is already visible. BlackRock has announced layoffs affecting roughly 250 employees in early 2026, following similar cuts in 2025. These aren't just cost-cutting measures. They're restructuring for a different kind of business model. They're eliminating positions in traditional investment management while hiring for private markets and digital assets. What does this mean for someone in their 40s or 50s counting on their 401k for retirement? It means the rules of the game have changed. But nobody told you. The investments that built wealth for previous generations are being abandoned by the very people who created them. Your 401k is probably still heavily weighted toward US stocks and bonds, because that's what the plan offers. Your pension fund is likely still buying Treasury bonds, because that's what their mandate requires. Your financial advisor is probably still recommending a traditional asset allocation because that's what they learned in training 20 years ago. But the smart money, the money that moves first and moves fast, it has already left the building. BlackRock's record $698 billion in net inflows during 2025 didn't come from retail investors like you. It came from institutions, sovereign wealth funds, and ultra-high net worth individuals who have access to the private investments that you don't. The most disturbing part of this story isn't what BlackRock is doing. It's what they're not saying. Their public communications are filled with technical jargon and measured language designed to avoid panic. They talk about tactical underweighting and country diversification instead of calling it what it is: a massive bet against the American retirement system. Larry Fink's recent statements about tokenization reveal the endgame. He's talked about putting every financial asset on a blockchain, creating markets that never close, and enabling instant settlement of all transactions. This isn't speculation. BlackRock has already launched tokenized funds and is actively building this infrastructure. What happens to your traditional retirement account in a tokenized world? It becomes obsolete. Your 401k becomes a relic of an analog financial system that the digital economy leaves behind. The institutions managing your money will have no choice but to adapt or become irrelevant. BlackRock's positioning suggests they see this transition happening within the next decade. Their massive investments in private markets, their dominance in cryptocurrency exchange-traded funds, their development of tokenized financial products. These aren't experiments. These are the building blocks of the financial system that will replace the one your retirement depends on. The scariest part is how quietly this is all happening. While Americans argue about politics and watch market headlines, the foundation of their financial future is being systematically dismantled and rebuilt. The new system isn't being designed for retail investors. It's being designed for institutions that can move billions of dollars at a time. Your 401k was built for a world where the US government's promise to pay was sacred, where American markets dominated globally, and where traditional asset allocation could protect you from major losses. BlackRock is telling you that world no longer exists. The question isn't whether this transition will happen. BlackRock's actions show it's already happening. The question is whether you'll recognize it in time to protect yourself. The smart money isn't waiting for your permission, but they're not asking for your opinion. They're moving with or without you. This is your wake-up call. The retirement system you've trusted, the investments you've counted on, the financial future you've planned for, it's all changing faster than most people realize. BlackRock's $14 trillion move isn't just an investment strategy. It's a roadmap to a financial future that might not include you. The choice is yours. Adapt to the new reality or become a casualty of the transition. But understand this, the change is coming whether you're ready or not, and the people managing the change have already moved their money. The question is, when will you move yours?